Ladies and gentlemen, good day and welcome to Texmaco Rail and Engineering Limited Q2FY25 earning conference call hosted by ICICI Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nidhi Shah from ICICI Securities. Thank you, and over to you, ma'am.
Thank you. On behalf of ICICI Securities, I welcome you all to the Q2FY25 earnings conference call of Texmaco Rail and Engineering Limited. Today we have with us from the management, Mr. Indrajit Mukherjee, ED and Vice Chairman, Mr. Sudipta Mukherjee, MD, and Mr. Hemant Bhuvania, the CFO. Without much delay, I would now like to hand over the conference to the management for their opening remarks. Over to you, sirs.
Good morning to all of you. This is Indrajit Mukherjee. I am the Executive Director and the Vice Chairman of Texmaco Rail and Engineering. I'm delighted to welcome you, all of you, for Q2 and H1 financial year 25 earnings discussion. We had a very action-packed quarter, and we have achieved many goals which we want to do. So I trust that you have already reviewed our financial results and accompanying earning presentations which are available on the stock exchanges. A significant development in H1 FY25 was the completion of our acquisition of Jindal Rail and Infra. Now we have named it as Texmaco West Rail. This acquisition marks an important and very significant step in Texmaco's strategic growth, enhancing our market reach, establishing Texmaco as a leader in the freight car industry, and also in the domain of new developed and advanced high-tech wagons. So this is one of the pursuits that we wanted to do, serving purpose of becoming a pan-Asia player, and secondly, our pursuit for global excellence and a baby step towards becoming a global player. The integration process has advanced or has moved very smoothly, with synergies being fully captured as per the expectations. The acquisition has also, as I said before, increased our revenue share from the private sector freight cars, which, as all of you will know, will lead us to have higher realization per car. In Q2 FY25, Texmaco achieved continued growth and operational progress. Revenue reached 1,346 crores, while EBITDA was 149 crores with an 11% margin. PAT for the quarter was 74 crores, reflecting a 5.5% margin. For the first half of FY25, Texmaco's revenue from operations amounted to 2,434 crores, underpinning our growing market presence and robust demand across the segments. EBITDA for the H1 was 272 crores with an 11.2% margin, and profit after tax stood at 133 crores with a margin of 5.5%. Operationally, we reached a new milestone in freight car sales with 2,927 units delivered in Q2, of which 72% were for Indian Railways and the balance fulfilled private and export orders. Additionally, our steel foundries in Raipur and Belgoria produced 11,156 metric tons of castings and railway components, making a year-on-year increase of 3.5% and highlighting our ability to meet rising demand while sustaining our leadership in the steel foundry industry. Now, this growth is, as you all know, is limited to the capacity, and we are taking many actions of debottling the foundries. In addition to that, as you all know, that we also are in the process of building up a new foundry in Odisha. Looking forward, our order book is at 8,200 crores, with freight car business accounting for 72% of the same. With the added capabilities of Texmaco West Rail, we are very well positioned to further expand into the private wagon manufacturing space. Our strategic priorities for the remainder of FY25 and beyond include enhancing operational capacity, expanding our international footprint, and continuing to drive integration benefits with Texmaco West. Notably, Texmaco has been awarded the 3-star Export House certification by the Government of India, affirming our role as a valued contributor to India's trade landscape. Texmaco remains focused on sustainable growth, operational excellence, and strategic innovation to deliver long-term value. As we enter the second half of the fiscal year, we are committed to strengthening our market position further in line with the industry developments. With these few words, I would request Mr. Sudipto Mukherjee, our Managing Director, Mr. Hemant Bhuwania, Chief Financial Officer, to address to you and take up any questions which may come to you. Thank you very much.
Thank you. Hi, good morning, everyone. This is Sudipto Mukherjee, and with me, Hemant.
Hello, good morning, all of you.
So, I think the perspective is being and the achievements have been narrated quite aptly by Vice Chairman Mr. Mukherjee. We'll be very happy to answer your questions together.
We are open for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viran Patel from Balaji Investment. Please go ahead.
Yeah, good morning, sir. Can you hear me, sir?
Yes, we can hear you, please, Mr. Patel.
Congratulations for the fantastic result. We were not expecting this kind of result, but we have beat our expectations. So many congratulations on that, sir.
Thank you.
Secondly, I have 3 questions to ask you. One is, how we have funded Jindal Rail? So, how the money, from where the money has come, how we have funded it? My second question is, I was going through your announcement dated 25th October, where you are looking into get into opportunities of real estate. So, I just wanted to understand where all we have land banks or how we are going to get into real estate field. And the third question is, how many wagons now we are producing per day or per month? So these are my 3 questions. I would be very happy if you reply to them. Thank you so much.
Mr. Patel, we couldn't hear the first question properly. While I could hear the Jindal Rail word, balance we were not able to hear.
I said how we have funded it, from money from which, have you borrowed the money or it is from internal accruals, or how we have done it? The current balance sheet reflects that money has already been paid and the current liability is already accounted to on that front.
So, Mr. Patel, good morning. So, to answer to your first question, the entire Jindal acquisition has been completed on 3rd of September. The fund has been remitted, and it was done through internal accruals from the company and certain portion from the QIP funds which were there. So on the second and third question, our Managing Director, Mr. Sudipto, will answer to it.
So I think the second question was the enabling resolution for the real estate development. So you all know that we are in a process of restructuring the company, and while we are in the trajectory of growth, so we thought that we have to take care of our redundancy and whatever the best utilization of various assets are possible in the way forward will put the company into more sound footprint. So the company has many such lands which were never thought of being utilized as a part of production enhancement or any production facility there, and there is no possibility, or rather could be a higher return can be faced if it could be developed or utilized on rather than manufacturing. So those redundancies we want to convert it into assets and convert it into some good returns for the company in the way forward. So that's why we thought of having a kind of enabling resolution to get into. Otherwise, it's not like that we want to become a real estate company. It's only just to enable us to move ahead and start working on that. And third, I think you mentioned about the wagon production, if I'm not mistaken. If you see that by H1, we have already manufactured around more than 5,300 wagons. So from there, at least this we will maintain, and we expect that we'll be further improving upon in and around this. And we will get more better product mix, including the private and specialized wagons.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Nikhil Abhyakar from UTI Mutual Fund. Please go ahead.
Thank you, sir. Thanks for the opportunity, and congrats on a good set of results.
Thank you.
Sir, this real and green energy segment continues to remain a drag on our profitability. So what is and if I'm not wrong, we were looking to demerge this from our business. So what is the status over there?
So Nikhil, we have received the approval, and you know that these things require a kind of a process. In the last call also we have mentioned, and we are committed for the separation of that wing so far, and we are progressing with right earnest. So in the appropriate time, as a significant progress happens, you will be able to know, and as I say, right earnest, we are very much keen to do it as fast as possible, and we are on right track and right speed of the process.
Should we expect it to happen in FY25?
Sir, of course, our intention is common with you, but you know that the government machineries and statutory obligations are there where it is very difficult for you and me to commit. But expectation is as aggressive as you have, and we are with you in line.
Sure. And the second question is regarding the order inflow. So can you tell us what is the quantum of tenders which are open right now, and how much do you expect ordering from the railways in this year?
To be precise, Nikhil, this financial year, I think around the nature of the tender from railway has shifted to small tenders, and we have been actively taking in part in the wagons which are higher remunerative and we can deliver. I can give you a glimpse that when the largest order came out, so our asking rate for railways was 600 wagons per month. Now with the accumulation of further order, it has gone up to 800 wagons per month. But mind it that it is in considering the fact the performance or the execution we have, and we are not incurring any liquidated damages in any Indian Railway orders. So it is coming in, and we are just looking at the best basket of it. In private, we have got good momentum, and we expect that certain large tenders will come up, and this year and middle of next year, we expect around 30,000 more wagons to come in. Whatever we know about, the tenders have come up and something is in the pipeline.
So 30,000 from the Indian Railways, plus there will be the private side.
It could be this 30,000 is an approximate figure, Nikhil, what we hear, because as you will appreciate that it may be 26, it may be 28, it can be 32 also. So this is what we have certain visibility, and we know some progress has happened. And if you talk about private specifically, last year has seen the highest offtake of private wagons, which was around 17,000. So worst to worst, we feel that anything between 12 to 15,000 over and above 30 should be there in the market, considering the government push in the infrastructure.
Sure, sir. Thank you and all the very best, sir.
Thank you, Nikhil.
Thank you. The next question is from the line of Mohit Kumar from ICICI Security. Please go ahead.
Hi. Good afternoon, sir, and congratulations on a very good set of numbers. So the only question I have is, of course, the GPWI scheme, as I understand, there was a ban, right, I think 1.5 years back. Have you heard anything on that, on the same? Do you expect the ban to be lifted in the next coming quarters?
Good afternoon. Thank you for your best wishes. GPWIS was never, I would refrain to use the word banned. There was a moratorium in between, because what we hear or we have learned that there was a lot of approvals which was accorded by the government, and these approvals were time bound. Suppose government approves me as a licensee to procure wagon, and they give me time that till December 2025 I have to place the order or induct the wagons into the system. So there were a lot of gap in that on the license issued and the offtake of the wagons, and that's why they put on a moratorium, and just to have perhaps a feel of it. Somewhere we also have learned that there were certain kind of congestion because of the improper distribution of the routes. So it was a moratorium for the time being. And in between, I think a lot of meetings government had initiated and the industry houses participated. And we expected around 200 rakes were supposed to be procured. Out of that, we have started seeing a traction, and we expect that within this financial year itself, in last couple of months, we have seen around 40-50 rakes already been order being placed, and we feel that this momentum will continue till these 200 rakes are being procured in spite of the moratorium, because these licenses were issued earlier and the refixed date of induction perhaps is being decided. And Texmaco, your company, is also a beneficiary of it, and I'm happy to let you know that we are turning out these GPWIS rakes perhaps in the best possible timeline to the market today.
My second question is it possible to quantify the synergy we're expecting from acquiring the Jindal West Rail in terms of cost, quantify the cost efficiency? Is it possible?
Cost efficiency is very high, that much I can say, and it will be complementary, and it's a very healthy situation, because I cannot give you apple to apple, because the product portfolio and the mixes are different, and that was one of the reasons of acquisition of that company. And but we do not find any inefficiency for that company which will drag, but it will be a complement on a higher side for Texmaco.
Understood. Last question, is it possible to share the Jindal Rail revenue EBITDA in the first half, H1?
Hemant, so Mohit, the H1 they made a total revenue from operation was 426 crores, and their PBT was 63 crores, 62.73 to be exact.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank
And
you.
Mohit, just to add to you, that if you see that we expect that we will be better off, maybe even in the commodity wagon if we do apple to apple, because our foundry capacity is going to be a complement to Jindal, which was never there.
Understood, sir. That's very helpful, sir. Thank you and all the best, sir.
Thank you. Thank you, Mohit.
Thank you, Mohit.
Thank you. The next question is from the line of Aman Soni from Ninvest Analytics Advisor LLP. Please go ahead.
Hello.
Hi, Aman.
Hi, sir. Am I audible? My question is specifically on freight car division. We performed decent in this year in terms of volume. Can you help me to understand going ahead in next 1 or 2 quarters, what kind of orders inflow do you see in this segment, and what kind of execution do we see here in second half?
So, Aman, to answer you, I can only share our vision and ambitions, because placing order is not in our hand, but seeing the momentum and the market, what we believe that while we will maintain our position of percentages, and rather we will grow on that in both the categories of wagons and including export. And if you see that today we are in a position, as Vice Chairman also mentioned, in a leadership position, and we have the highest capacity to cater to the Indian both railway and private as well as export. So to answer you in one sentence, we'll feel that the progress of order intake should be better, and our execution will at least remain in the same trajectory, and we feel that to excel in both the categories.
Sir, by the end of this year, like by end of Q4, what kind of run rate do you see in the freight segment? Like in this quarter, we did around 2,900, right? So what kind of run rate do we see by the end of Q4, sir?
Sir, we have produced 5,300 wagon in a consolidated manner half yearly. If you multiply by 2, because we cannot go down, so it becomes 10,600. So we will be any time near to that, or even little better to that.
So are you saying like H2 is going to be in line with H1 only? No growth will be there, right?
I said minimum this is itself is a growth. Maintaining this is also a growth, and we expect we'll do better than this. The H2, we expect that we will be doing better than H1.
Got it, sir. Thank you very much, sir.
Absolute figure, but it could be better. It would be better. That's what we expect.
Got it, sir. Got it, sir. That's it from my side, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Abhijit from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, and congratulations on a very good set of results. The first question is on our capacity plans. Right now, if I understand correctly, the capacity is in the range of about 3,000 units a quarter. That is for the freight wagons. And for the quarter 2, the volume seems to have reached the peak utilization of about 95-97%. So in that context, sir, in H2 and in FY26, what is going to be our capacity expansion plan? Also, a related question. So if we compare our gross block from Q4 to Q2, that has seen expansion of about 400 crores and basically doubled. And that proportionate expansion has not been seen in revenue. So, I mean, assuming Jindal Rail acquisition, the utilization for Jindal Rail capacities has not reached its peak. So how is the ramp up going to happen in second half in FY26 pertaining to Jindal Rail?
Abhijit, thank you. I would like to answer the first part first, and then maybe Hemant can touch upon a bit, and if anything is required, we can jointly answer. To answer you regarding the capacity, it is not in our mind actually, to be very honest, that we don't feel our capacity is 12,000 or 10,000 or 15,000. Capacity of production is a kind of a elastic in terms of freight rolling stock when you have a decent infrastructure. It's a question of utilization with the right product mix, that what is your business plan, vision, what is the market and where you want to go. So far I can assure you, so far Texmaco is concerned with all its 3 manufacturing units and the coming joint ventures which are coming, there will be no limitation in terms of flexibility, agility and capacity in terms of numbers of production of rolling stocks. And even if you, so unnecessary, we do not want to use our resource, because we know that within the present setup even, with a kind of requirement we can do better. That's why you have seen that we are very keen and focused on expanding our export portfolio. So these are, I mean, to answer you, we don't need any capex to do that. So these capacities, you can see that it's not a problem and not a challenge for your company. In terms of foundry, yes, it is important, and if you have seen that last 1 year and a half, we have been continuously improving on the existing facility even. From 30,000 to today's run rate, in the half yearly, we have almost done 21,000 metric ton, and which you even only multiply, it will become 42,000 ton, which is also highest in the country. And further to that, we have certain visions and ambitions to reach to newer markets, and we are setting up a new foundry in Orissa, as in Vice Chairman's speech he has mentioned. So I feel that these 10,000, 12,000 or 1,000 a month is a misnomer. Most important is what you do and what is the mix. Second part, Hemant, he was asking for some.
Yeah, the second part, you mentioned that there has been an increase in the property, plant, equipment, that is on the capex part. Yes, there has been an increase, which is mainly on account of acquisition of Jindal Rail. Since you are seeing the consolidated results, it includes the numbers of Jindal Rail. So Jindal Rail, the net fixed asset addition has been to the tune of approximately 300 crores. That is why you see an increase in fixed assets.
The gross block.
In the gross block.
Gross block, yes.
Right. Sir,
have we been able to answer you, or you have any doubt or any question?
Sir, one thing related to this, and also in continuation with the earlier participant's question on the synergies between the acquired company and Texmaco. So in that sense, it seems like, the asset turnover, fixed asset turnover for Jindal Rail right now seems to be on a lower number compared to our existing business. So in that context, how is the ramp up going to happen, and how are these margins and turnovers going to pan out going forward, with the acquisition and the expansion panning out?
So Abhijit, if you see, maybe I will not be able to, or will not be able to give you a numeric number to the cause of this, but I just would like to remind you of a point that Jindal Rail, suppose it has a 120 acres of land and two railway siding, and we are only today within 50 acres of it. And there, as I said, that increasing or having a better mix or reach to a better market is not at all a challenge. The balanced land, we have other visions and plans way forward to gainfully utilize and create more value adds, not to expand for wagon, perhaps.
Right.
We have few plans which we are working, and progressively we'll find that something is happening.
I just like to add to Sudipto's answer is that, see, the synergy from Jindal is not only restricted to cost, it's restricted to market synergy, because it has given us a tremendous reach to the private segment, to the private sector market, which have a higher realization. And we have now in a situation when we know which is going to be which orders will go. And secondly is that our capabilities width of product is so high, because it's going to be from generic orders to the generic wagons to the high-end wagons, and we are doing further development. So I think the market synergy and value capturing has been very high, in addition to the numbers, which are very important to increase. And I think Sudipto was saying, sometimes product mix is more important than mere numbers.
Right. Thank you, sir. Thanks a lot. I'll join back in queue.
Thank you. Thank you, Abhijit.
Thank you. The next question is from the line of Rahul Jain from GM Financial. Please go ahead, sir.
Hi, sir. Thank you for the opportunity and congratulations on a good set of numbers.
Rahul, we have a problem to hear you. There is a background noise.
Is this fine?
No.
Just a second. Is this better?
No, Rahul, you are not audible. You have to speak bit little louder, and there is a kind of a background voice.
Hello? Is this
better?
Now it's very good.
Yeah. So, sir, thank you for the opportunity and congratulations on a strong set of numbers. So my first question is, your H1 production has been very strong, and with acquisition of this Jindal Rail, the production will increase maybe.
Again, your voice is getting faint, Rahul. Kindly, if you speak little louder. We are not able to hear.
So, sir, I was saying that your production has been very strong in H1, right? And with acquisition of Jindal Rail, can the production increase to 1,000 wagons per month plus? So, can this go beyond that? And also, if you can highlight that your market share might increase because you might be able to provide additional wagons in the market. So, can that be a case over the next 1.5 to 2 years?
Rahul, I think yes, you have captured the answers correct. In both the in all the questions, the answer is yes. We will have better market share. We have more agility to supply. We have most variety of products to cater to the market. We believe that we have a very strong technical capability even to have a tailor-made and curated solution for the customers. And our numbers are not limited to 1,000 wagons a month. It is much beyond.
So can you give that number if possible?
No, I cannot give you that number because it depends on a mix, you know. You are in the market since long, so you know that in product mixes determine the number. As I have tried to explain in Abhijit's question, that it can vary. I mean, if suppose a new design comes up tomorrow, so as a matter of a capable company, can I decide that it is more complex and I will only make 100 wagon a month? No. So we have to be capable. We have all the flexibilities to do much beyond 1,000, and product mix is important rather than having that number.
You know, Rahul, this is Indrajit Mukherjee. I'll only amplify on Sudipto's point, and I think he made a very important point that our capabilities are there. We have the capability and flexibility to do anything from one to the other end. And that's more important, because once you have the capability, you can always use that capability when the opportunities come or when we develop opportunities ourselves. So that's more important than how many actually numbers you are doing. We can do any numbers.
Right, sir. Got it. So my second question is, there will be higher private sector wagons supplied, which can have a higher margin. So can we see your margins, which was around 10%, or operating margins, which was around 10% in H1, can this move to 12 to 13% over next 1.5 to 2 years, with private sector wagons contributing more after the acquisition of Jindal Rail?
So, Rahul, absolutely yes. What you mentioned, we all are working towards the common goal to increase the EBITDA margin, what the numbers you mentioned. And yes, we are hopeful that with the increased percentage of private portion in comparison to total supply, the EBITDA should go up in the coming days to come.
Sure, sir. Sir, if you can highlight what is private sector wagons margins, if you can just split it up for us.
So, private is always better than what we have in terms of railways. And after private, we have export. Export is even better than what we supply to private. So that is how the pricing has been done, and the contribution margin is generally defined in the industry per se.
Sure, sir. Got it. Sir, how much was the export this quarter, and which products did you export?
So export was on the two segments. One was on the freight car. We have exported to Africa. And second was export is on account of steel foundry, wherein we export railway castings to US and Australia. The total number of export,
we have also exported to Europe wagon components, wagons into knockdown parts.
And the total export number, I have now, Rahul, it is 185 crores in H1.
Sure, sir. Sir, what are your plans for new products in the next 2 to 3 years, if you can mention that also? Because you have several land available after this Jindal Rail getting acquired.
So it is progressive in nature, Rahul, and many things we are looking forward to. So far maybe in railway segment or even beyond railway. So to be specific in this call is little difficult for us, but we know that you are very keen with us, and we will keep on informing you as we progress.
Done, sir. That's it from my side. Thanks a lot. All the best, and happy Diwali to the team.
Thank you. Same to you.
Happy
everybody.
Happy Diwali to you.
Thank you, sir.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, you just mentioned that the new facility at Jindal, we have extra space where we can look out for new ventures. So, over what period of time we will be able to hear something about the new business plans?
Mahesh, good morning to you, and thank you for your best wishes. Being in the trade, that we keep on working on something and what matures. In the last two acquisitions, you have seen Texmaco's agility. That when we found it is profitable, we committed to you and the market that we want to take up businesses, but not for the sake of it. But we want to make it a story that where we can really perform and take care of everybody stakeholders' interest. So, given on a right chance, we are working on various possibilities, and we'll keep you updated. To be specific now, it will be very difficult, but it can also, something may also happen very quickly. But defining timeline is difficult right now.
Let me also add to Mr. Mukherjee's answer. See, if it is within our present domain, then we have a very clear growth path, and we have a very clear growth direction. And that I think we have mentioned it earlier also, that we are trying and developing the component business, which are the components of the freight cars. And that's why you must have seen that we are trying to, and that's what Mr. Mukherjee has said, that we are exporting freight car components in knockdown conditions, and we are talking, and we also have an aspiration to take our export strength to be a global player of global supplier. And that's the reason why we are also very much concentrating on building up our global capability center. We also are looking at revamping our foundry capacity by putting in a new foundry, which perhaps will be mostly export-oriented and will be going to the countries outside India and developed countries like US and Australia, etc. So these are within our domain. We know that we have a very clear growth path. If you are asking outside the rail segment, then I think you'll have to wait for something to come up. Right now, we are not in a position to say.
Great, sir. And sir, the operating margins at consolidated level around 9.8% for last 2 quarters. Now, given the the scale we are acquiring, where our revenues are growing fast, some point of time, economy of scale needs to come up. So, will this add into a substantial, in terms of margins, will add significantly over next 2 years? Will it change the margin trajectory from maybe 10% to 12-13% kind of level, equivalent operating side?
So Mahesh, yes, what you mentioned, yes, absolutely, we are working towards a common goal to increase our margin. So as I mentioned earlier also, since more and more execution on the private side is our endeavor, and as it happens, you will see definitely an improvement in the operating margin also.
Sure. And sir, last question from my end is that the net debt level has gone up with the acquisition. It's around 800 crores now. So when we look out for new businesses, new venture, is there any limit we have placed in terms of taking further debt on the balance sheet?
So, Mahesh, this will be too premature to answer that whether any further debt for the new acquisition or anything would be added to it. So generally, we work on a debt equity of 70-30. So depending upon the case-to-case basis, the call would be taken by the management whether to add debt to it, and if the internal accruals are sufficient, whether to meet the funding through internal accruals. So
for what?
For any future project. So depending upon the future projects on a case-to-case basis, our decision would be taken, Mahesh.
Sure, sir. Thank you so much, sir.
Thank you so much, Mahesh.
Thank you. The next question is from the line of Harshit, an individual investor. Please go ahead.
Harshit. Good morning, sir. Am I audible?
Yes, Harshit. Good morning.
Good morning, sir. Congratulations on the great set of numbers. So I had a couple of questions, if you can just help me. So firstly, could you give us an update on the global tender for modern wagons? So the order was more or less in process before the elections, but I think it took a backseat after the election. Any update on that, sir? If you could give us, throw some light on that. And if there has been any kind of pre-qualification round for those wagons, sir?
Okay, Harshit. It's a question which is very close to our heart, but I cannot be the spokesperson of Indian Railway, but I can only share with you the information I have in and around it. So last time when it came, so of course perhaps whatever be the reason, it got on hold. But now I think Indian Railway has done a significant kind of decision where they have decided that to send a kind of high-power delegation from railways to Europe and America to go to few companies to study that what are the kind of rolling stock they use and what is the difference we have in India and what it calls for. And I know it by virtue of the fact that perhaps few of our associates are also getting visited. So maybe we expect and we hope, wish that coming back, a proper specification maybe they will be again initiate to do. And from a market perspective and dealing with customer, I can say that there is a requirement of higher capacity and efficient rolling stock in the country, and I believe that Indian Railway is very much conscious about it, but they are taking time because it would be a long journey, because the maintenance regime will change and many new things, the life of the product will increase, and so taking time is not a problem, but it has to come as the railway market is gaining momentum, and we are ambitious to make a more reliable, trustworthy, safe rolling stock. Third is in terms of eligibility, I'm not sure, but of course government would love to work with inclusivity, but I can say on behalf of your company that we are, whatever be the eligibility criteria, so far if it is in line with all the global tenders done by other railways, because we have started qualifying in many international tenders. So we have all the eligibility and we have the capability to get into it, because we are having our own bogies with our joint venture partner Wabtec. We have our wagon designs and we have some American companies also with us associated, so brake system and everything. So we are very well placed and keenly looking forward to something new and new design wagons. And irrespective, we are working on few new designs for the market, considering there is a possibility of very good private sector investment of private wagon optic, and DFCC are also getting operational more and more. So we are very well positioned in this advanced type of wagons for the country.
Right, sir. So just one follow-up question. So basically, there hasn't been any communication or indication from the government side around that for us, right, at the moment?
Nothing official about it. There was an advertisement of Pepsi, I believe.
Right. Okay, sir. Thank you so much. That's really helpful, sir. That's a really good insight from your end, and all the very best, sir.
Thank you so much, Ashik.
Thank you very much.
Thank you. The next question is from the line of Mahek from Agility Advisors. Please go ahead.
Hello. Thank you for the opportunity. Am I audible?
Yeah, you are audible.
Yes. Yeah, so sir, just wanted to understand more on the execution timeline of the orders in the infra electrical segment. So we have close to 1,700 crores of the order book, and then H1 has been quite subdued. So if you could just highlight what is the timeline and how are we planning to increase the revenue generation in that segment?
So it is we don't consider it subdued, Mahesh. If I spelled your name properly, I was not able to hear. So I think it is one of the most profitable segment of Texmaco, and we will do further better from here, and we are very confident about it. You will see much more better results on year basis also, or in the next quarter or the second half of the year.
And we have also repositioned the company, the entire the electrical system, the division. We have repositioned it from a purely railway play to non-railway play also, and that's paying off very that's paying off very profitably. We are very bullish on this division, and particularly the capability of the organization and its goodwill in the market.
Okay, so any timeline, like is it a 3-year order book or a 2.5, 4-year order book? Any specific timeline that is by when we need to complete these orders, the 1,800 crore orders which we have?
It's a 1,700 crore order book. So every contract has its own this thing, and we can only say that the top line, you will see that it will multiply in the coming quarters and years, and it's a progressive nature. So far the orders are coming.
And the orders are flowing in, and in fact we are looking India as well as outside India. So all that is flowing in. I mean, a little bit of patience he will see this division completely in what we are saying, that we will be walking the talk.
And along with, as I mentioned about top line, but I must add that bottom line will be very strong of that business too.
Okay, understood. And sir, second question was if you could please provide a breakup of the volumes of wagons between Texmaco Rail and Jindal Rail.
So in terms of order book, you want to?
No, volume, the wagons, yes, in terms of execution.
So Texmaco Rail did Texmaco Rail and Engineering executed an order of 4,410 wagons, and Jindal Rail did 891 in H1.
Last quarter.
And in quarter 2, Texmaco Rail did 2,443 and Jindal Rail did 484.
So we can see a pickup in the volumes from Jindal and from H2 as well, right? Because they do have good order book available.
So yeah, Jindal has a very good order book, but the type of wagon which they execute is not a commodity specific. It's a commodity specific wagon,
specialized,
and it's a specialized wagon. So you won't see the same numbers what Texmaco does, and the same number what is being done in Jindal Rail. So definitely the numbers in Jindal Rail will be relatively lesser because they do specialized wagons and a lesser of commodity wagons.
Okay, understood. And sir, last question was, Jindal Rail has a technology to produce double-decker wagons. So how are we expecting any significant synergies due to that technology? Any good order book tenders which are available and we will be participating, and how should we see that segment?
Mahesh, thank you for asking this. So your both company, I mean, erstwhile Jindal, now Texmaco West, and Texmaco Kolkata, both are capable to produce double-decker wagons. And you will be happy to know that where the synergy comes from, because we were the two companies who are part of the design of the double-decker wagons. So Jindal owns a design which is being called as ACT1, ACT1, which is a one-notch higher progressive technology than the erstwhile automobile wagon being procured by Indian Railway. And ACT1 recently from a company called APL Vascor, we have got in September an order of 3 rakes to deliver to them. And for Texmaco is in the final stage of approval from Indian Railway for designing ACT3, so which is again a different variety of a double-decker wagon, and today is the most leading design in the market which is going to be, and it could be a game changer because it can also accommodate tractors, and whatever be the shortcomings in the other type of design, we have tried to take care of that, and it comes with a global flavor of safety and reliability. So we believe that the automobile companies were looking for an efficient logistics solution where they can reduce the carbon footprint in their company by going so many trucks enter at the same time. They wanted an efficient logistic where they can reduce their logistic cost. So we will be having the most versatile portfolio of the next generation automobile wagons to say, and we expect this segment will grow significantly in the coming quarters to come or the months to come.
Okay, and this would be a higher margin product, right?
We expect, sir.
Okay. And sir, last question. So the capacity which we have...
Special type wagons, and definitely these are special.
Okay, understood. And sir, the last question. The capacity which we have currently in the Texmaco Rail, including the Jindal one, so what is the peak revenue which we can generate from the same? Any ballpark number?
Sir, again, to be very honest, this is the number we never think because if I talk about any number, it only restricts me. We believe, I repeat, that the product mix is the determinant of a number, and we are very much focused on our capabilities, and we believe that we have no limitation to achieve any number for any of our work. If you see that in H1 we have already achieved 5301, if you multiply, it goes to around 10,600 wagon per annum. But we expect that H2 would be better for the company, and whatever be the mix, we are irrespective, we will improve our numbers. That's what we believe, and we are working for. And in the coming days also, I mean, we want to continue to grow and bring better values for our stakeholders.
Okay. Thank you so much.
I'm sorry for my roundabout answer, but because any number limitation actually we do not want to rely upon.
No issues. Thank you so much.
Thank you, Mahesh.
Thank you. That was the last question. I would now like to hand the conference over to management for closing comments.
This is Indrajit Mukherjee once again, and I would like to thank all those present here for their patience and for their interest in your company. I can only close by saying that there has been action-packed here, action-packed half year, and we are strictly following what our strategies and tactical plans are. We are, and that's what is giving us certain results. So I think what we are doing is that we have a very structured plan. We are not doing anything which suddenly whimsically comes to our mind, and we are following that path, and we continue to do that to add more and more value to our shareholders in the future to come. And I would be very happy to share our plans whenever anyone wants, can call me or our team. And also, I would also welcome if anyone would like to come and see our facilities, either here or in Texmaco West. So we have transformed ourselves to a pan-India player. We have transformed ourselves to be a player where we would be in a stronger mind with stronger product offerings which others can't do it. And also we are getting future ready, not only in the freight car but also the freight car component business. And of course we are looking outside the freight car, but I think, as I said, that will gradually come. So with these few words, I would like to offer our season's greetings and happy Diwali to all of you, and I would expect that even better time to come when we meet next time. Thank you very much.
Happy Diwali to all of you.
Thank you and happy Diwali.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.